It leaves us with a slowdown, which is continuing. It is slower, and it probably will slow further. The big question on China is whether the interest rate liberalization that's going on will result in a banking crisis. It might, and the government has the means to recapitalize the banks if it needs to. But in the meantime, the market is really afraid that this will mean a lot slower growth, as all credit crunches do.
Because the second quarter figures don't really include much of an impact of the cash crunch that we saw coming in it was just towards the tail end of June, wasn't it? So this data doesn't really reflect the most recent concerns, as you say, about liquidity in the Chinese market. Yes,
and investment is slowing down. It has to, but it is, and exports are quite slow as well. So also with Japan devaluing its currency, China's got a lot of challenges ahead.
What the Chinese government are doing in the banking sector, perhaps aimed at the shadow banking sector specifically, does this help prevent a hard landing for the Chinese economy, or does it engineer a hard landing?
That's a good question.
I find it hard to work out whether they actually want, the economy to land. Where they want it to land.
Well, I think they want it to slow gradually, and I think they realized that they stepped on the brakes a little too hard. So they released the pressure on the brakes and put liquidity back into the system. It's very delicate. It's very delicate to go through the transition they're going through. They don't want a hard landing, but we'll see.
Do you get enough information you trust coming out of China to make fund management decisions about that economy? Do you feel you have the full picture?
I never feel like I have the full picture.
I'm not sure anyone does who comes to talk to us about China. You say deleveraging is the key. The shadow banking system, of course, is only part of the banking sector. Where does the banking sector go from here, then? Because we've seen this, there's a report overnight that Alibaba, a big company, of course, in China, has been given the go-ahead to move further into the loan space. At the moment, we've got the heavily regulated state-run banking sector, and then we seem to have the shadow banking sector.
Yeah.
Is there room for something in between, then?
There's a lot of room, and that's what has to happen, is you need to have interest rate liberalization where banks begin to be able to lend to smaller companies. If they're able to do that, eventually you'll have a first-world banking system, and what's important about that is that capital will be allocated correctly. China needs to move to that transition. Slower growth, maybe 4.5%, 5%. Maybe even a little slower, but actual companies that make real profits. That's what needs to happen.
Yeah, because you say that we're actually sitting on what needs to be a profound economic transformation in China. We need to see the state-owned enterprises taking on a different role, perhaps being reduced in size, different pressures applied to them. What exactly needs to be done with those?
They need to shrink. A lot of them need to close. You need to have private sector companies taking on the role. That's been happening. It'll probably continue to happen. The only question is whether it can happen smoothly. My guess actually is that it probably will, and that China will not undergo a major ruction or a major rupture, and that we'll find that actually right now the market is pretty cheap, and that this is probably a reasonable time to start getting invested.
Because you say that some of those state-owned enterprises are not actually in areas that China considers to be strategic. There are many state-owned enterprises away from the names that we hear about most frequently, I suppose.
Yeah, there are over 100,000 of them, and probably 1,000 would be ones that are strategic.
The Chinese reorientation away from exports towards driving the domestic demand story, you see that as something that has relevance to other emerging markets as well?
Absolutely. I think the emerging market story has to go through a real transformation now. The old story of export-led growth is over, really. And a lot of countries are struggling now as a result. Brazil's struggling, Southeast Asia in some parts is actually struggling. Everything's slowing down. So what has to happen is countries have to find their own inner drivers. Which in some cases is quite challenging.
It's very interesting to look at the relationship between democracy, authoritarianism, and where these countries find themselves, and what strengths they have right now to play on as we see this reorientation taking place. And you actually say that some of the authoritarian countries have the biggest challenges, but also the best chances perhaps of facing those.
In the short term, they do, because they don't allow riots in the streets. However, in the long term, keeping your population happy with employment is the key, and I don't think either one, whether authoritarian or democratic, particularly have a better shot at that. The key question is employment, and there are ways to make that happen, and some countries are moving ahead, and some countries are really struggling. Brazil is struggling. Turkey, people are unhappy, although that's a little bit different. That's more authoritarian.
Yeah, we've seen riots on the streets in Brazil. You say that this is a really underrated economy, though, at the moment.
Well, the market has been going down now for a while, and people I talk to about Brazil just don't want to talk about it anymore. They say they avoid it at all costs. And when that happens, as a bottom-up investor, you have to get interested. In fact, generally in emerging markets, the macro is pretty terrible, but that's giving us a situation where bottom-up, lots of opportunities are coming. So this is really the golden time to be looking bottom-up in emerging markets.
So which kind of companies would you be looking at? Petrobras, for example, in Brazil, that type of
Petrobras
asset?
has gone down from $60 to $12, and it's 6 years closer to really starting to improve its production. It's got to be looked at. It's got to be possibly interesting. Electrobras is trading at 17% of book value. These are real. Russia's trading at 5 times earnings. So although the macro is very uninspiring, you get cheap stocks.
Yeah, you say that Russia is actually valued cheaper than Pakistan at the moment.
Yeah.
You don't see that as sensible?
No, I would go to Russia to visit, and I wouldn't go to Pakistan to visit.
Okay. Top down then, so this is the contrast for you. Top down, emerging markets do look bad.
Yeah.
But bottom up, you can still find value. What's the key? What is it exactly you're looking for? Is it still growth? Is that the key in emerging markets?
I'm looking for undervalued growth and quality franchises, and there are a number of them. They're not all cheap, but some of them are, and this kind of environment where the ETFs get redemptions and therefore there's forced selling of everything, this kind of environment throws up the opportunities.